Good morning, YouTube. Welcome to the Resolution King, aka your real estate solution king. So today I have a very special guest, my coworker, Margaret Babish, which she works for Watson Mortgage, and you're tuning in to a very special interview. So please watch it from front to back. She's going to be dropping dimes and nuggets for you people that are looking to get financing for your mortgage. Without further ado, Margaret, how are you doing today?
Good, good. Thank you for having me on. Hi, everybody.
So, just to start out, tell the people how long you've been doing mortgages in the Jacksonville area.
Oh, 20 years, over 20 years in the Jacksonville area. I've been doing mortgages for probably close to 30 years.
Okay.
And I've been on the back end of the business, the wholesale, the retail. I had my own shop for a while. I worked for on the credit side,
Okay.
covered 3 states as a sales rep for the credit bureau services. So I have a vast background in the mortgage industry.
Okay. So, how did you get into doing mortgages?
Um, I had relocated to Dallas with my children. I have 4 children. Um, and it was for a medical reason that we needed to move there.
Okay.
So I needed a job, obviously. So I applied at a mortgage company, and they started me off as a processor.
Okay.
So that's how I got into the field, and
And then you just
that
fell in
was
love with the business.
yes,
Okay.
yes.
Now, what do you think some key things about the business that really has kept you in the business for so long?
Well, it's always nice knowing you help. I mean, you're helping someone
Okay.
get in their home, and it can be a very stressful journey,
Okay.
for the home buyer. And
Okay.
so I hope that at the end of it, they could say that they felt and I cared, because I really do. That's the
Okay.
biggest purchase they're probably ever going to make, and it can be daunting. So I've just enjoyed the people and the personal aspect of it.
Okay. So before we get into some real, tough mortgage questions, I heard you say something about being a credit processor.
Mm-hmm.
So what I want to ask, just for maybe some people out there that are maybe they're in a credit challenging situation
Mm-hmm.
right now, and they might be afraid to reach out to someone or even reach out to a lender to see kind of where they're at, and they're really thinking about getting themselves prepared for a purchase. What would you say to someone that would be in that predicament, that current predicament right
Um, well, when I worked for the credit bureau services, we can't do anything. No lender. It's like it's the most important part of the process
now? Yeah.
is what we need to see. But a lot of people don't really realize, the credit services have come so far. When I look at a credit report right now,
Yeah.
and let's say that someone it says, oh, my score is 580, or there's a section of that report that will tell me it might have 580, and
Yeah.
then I'll have 75, and then it'll be 650, or each bureau has things that they can do to raise your score, and we
Okay.
have access to that information. So what
Okay.
it's telling me is, if I see a 580 score and they're saying, and I see a 50 below it, it's telling me, hey, we can raise this person has the capability of raising the score 50 points.
Okay.
And so the unknown can sometimes be the unknown scary for anybody, but
Right.
we have to have a starting place.
Okay.
And also, as a loan officer, there's this joke, not a joke, but we like dread having we don't anymore, but the oh, we got to go to the underwriter. Right. Oh, we got to go to the underwriter.
Yeah.
But the underwriters, they want you to get in a house like we want you to get in a house. They want to work with us and work with, like, our whole goal, everybody involved in this process, is to get the person in a home. So if we have to work with you, if I have to go, click that button that what's going to tell me what do we need to do to raise this 75 points, it's going to tell us. And so find out what the starting base is. And if it takes us 6 months to a year to get you to a point where you can buy a home, well, it's better than being a year down the road and still not even looking to see what you could do. And a lot of times, I guess it's not, the news isn't as bad as what you think it is, but even if it's bad, there's always a road back.
Right. So that's, man, that's great advice. So this leads me to my next question. So if I'm a potential home buyer, what would be my first step in that process?
Filling out that application.
So filling out an application, and why should I just fill out that application?
Because the application helps me to see what road we might need to go down. Do we need to go down the FHA road? Do we need to go down a conventional road? Are you self-employed? And do I need to know, you're telling me if you're self-employed, oh, you make X amount of dollars, but I know when I see your tax returns, it might be 50,000 less, not because you've taken every write-off. That's the advantage of being self-employed. But do I need to tell you, okay, when you do your next taxes, if you want this amount of home, I need you to claim more income. It helps the application. It begins the puzzle of how we're going to get there.
So if I'm a first-time home buyer, should I go look at homes first?
No.
No. And why should I not go look? I want to look at homes. Why should I not look at homes?
Because what if you go look at a $400,000 home, but you can only afford or get qualified for a $300,000 home? Or what if you go look at a $300,000 home and you get discouraged because you really need a bigger home, but you're looking at this, and it's kind of like you want to go clothes shopping and you need a pair of jeans, but if you don't know what size you wear, how can you go buy jeans? So that's that's kind of, so you're not going to go and just start looking at jeans and buy a pair of jeans that you don't know if, well, you might, and then go bring them back. But I mean, buying a house, you need to know what type of house you can fit in. Like you would need to know a size.
So I heard you touch on a couple things. What are those items that they need to put together as far as being able to have ready and expect from a lending standpoint when they get ready to submit that application?
First off, most of the times when you're filling out an application, I want to help ease a little nerves and journey. When you're filling out the application, that application is not going to go to an underwriter right away. That application is going to give me access to your information so that I can help you or help us structure the deal. What is the best product for you? So I find a lot of people are afraid to fill out the application because they're afraid they're going to make a mistake. And it's like, until something goes to an underwriter, until we submit the loan, you can't make a mistake on it. So please just give us the information. Now, the most important information I'm going to need from you is your paychecks. I need 30 days of pay stubs. So if you get paid once a week, I need 4. Twice a month, I need 2. I'm going to need your W-2s, last 2 years W-2s. Bank statements. I'm going to need 2 months bank statements. And that will get us started. But the most important thing, which most people can just send right away, is I want to see your pay stubs. So that if you're on commission, if you get paid a base salary plus commission, I need to see what commission. I need to see how long it is, because you might say, "Hey, I make 50,000 a year," but
Yeah.
I'm not really realizing, oh, 10 of that's commission,
Yeah.
and you've only been at the job for a year, and I need a 2-year history of commission. That's why the paychecks are so important, because it
Okay. So
gives us.
the other side of that, you said bank statements.
Ouch.
Why do you need
Ouch.
my bank statements? Why do you need to know how I'm possibly spending my money,
Right.
or what am I spending my
Right.
money on? Why does the institution need to know what my bank account says?
Okay, that's a good question. And I never looked at it from until you asked me that question from that point of view, because I don't look at every line of a bank statement. I don't
Okay.
care how you spend your money. The main point of the bank statement is if you tell me, okay, I have $5,000 of my own money that I can use toward closing costs, I need to know that money has to be seasoned for 60 days.
Okay.
So let's just say, okay, I sold a motorbike a month ago, and I'm all of a sudden seeing, a large deposit of $5,000, and it's not in the bank for 60 days. I'm
Okay.
gonna have to, like, okay, where did this large deposit come from?
Okay.
So it's mainly for us to verify you have the money you say you're gonna have. Has it been, not that you're not, more
Yeah.
so that it's been seasoned long enough.
Okay.
And sometimes if you're on commissions, you might get your commission pay at one point in your regular. Sometimes they divide it up, and so sometimes we just have to match them up.
Okay.
But for the most part, I don't look at a line. I don't really care about how you're spending the money. It's more just to verify the information.
Okay. So, I want to switch gears, since you've given us a lot of little nuggets for people that are getting into possibly owning a home. And I want to switch gears to now more industry stuff,
Mm-hmm.
where people are, right now people are kind of freaking out because interest rates are going up.
Mm-hmm.
So can you tell us a little bit about interest
Why
rates and
interest
why
rates
why
got
yeah
up.
why they why
Okay.
for the people that are not educated in that field, could you tell us why interest rates are going up?
Okay. History has shown us that when we go through times of inflation,
Okay.
everything starts to go up.
Right.
Everything's going up, and it's going up at an exorbitant rate.
Okay.
History has shown us that when interest rates are raised,
Okay.
it's to slow demand down.
Okay.
So everything's going up, 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 up. People are like, I got to get this, but I can't afford it. I can't afford it. And so when you raise the rates up, the demand for items starts slowing down.
Yeah.
Hence, prices start coming down, and then inflation goes back down.
Okay.
That's the point behind raising the rates.
Okay. Awesome. So just thinking about that, even though we're kind of where we roughly sitting right now.
Roughly, we're sitting 7. On a good day right now, we might be able. And again, it's hard to give someone a flat rate, because you're going to get a better rate if you put 20% down than whether you put 3% down or 3.5% down. So we're roughly in sevens. On a bad day, we might be at 7.5.
Okay.
But,
so a couple things I want to ask.
Mhm.
One, what affects someone's interest rate as far as their rate, what they're able to get? You didn't mention down payment. What are some other factors that factor in?
Your credit is going to be the other main factor. We can, you can get qualified for a conventional loan with a 620 score.
Okay.
FHA will go a little lower than that.
Okay.
FHA technically they say is 580. But somebody that has a 600 score or a 620 score is not going to get the rate that somebody that has a 700 score or a 720 score.
Okay.
So, and again, to the amount of money you put down,
okay.
Affects it as well.
Nice. So 7% is where we sit at now, roughly. Now, where is that comparison to just where we normally sit at? Is that a little bit higher? Is it a little bit lower?
Well, let's talk about the elephant in the room.
Okay.
You know, every we have been very spoiled. You
Okay.
know, there is and I, you know, it's been 15 years since I have quoted the word 7% rate out of my mouth to customers.
Okay.
You know, we have been over the last, we've seen rates in the two, we've seen rates in the three, and we're talking historically low rates. That
Okay.
means in the history of, you know, historically low rates. So we have, I don't want to say generation, that's such a broad sense of terms, but we have been very spoiled for interest rates in the two and the three. And we do have buyers that are going in or that are ready, that are 30, you know,
Yeah.
or getting married and ready to start buying a home. And when they hear seven, they're like shell shocked.
Okay.
And so when you, the hit an average over the history of, you know, interest rates, seven, it's not, that's not bad. Like from me, you know, I paid 14% interest when I bought my first home. So there's a big disconnect.
Okay.
So what do we see happening? Where do we see this going?
Okay.
And so, can I answer a question that I asked?
Sure. Go
Oh,
go
no.
right. Go right. Look.
I'm gonna take this
Hey,
over.
hey. I love people that talk.
Okay.
Makes my job easier. I can just sit and soak in the information. But yeah, go right
Okay,
ahead.
so they just came out with the, they call it the building stats for October, November, and December.
Okay.
And which is tells us how many permits have been pulled for new home construction and all. So what's happening right
Okay.
now? So those stats for October, November, and December, they were down. They're down. They were down 20%.
Okay.
So you have a lot of people. This is, if I could say, okay, we have a crystal ball, what's going to happen? I think this
Right.
is as close as we might get to that. You have a lot of people waiting right now, waiting, because interest rates are too high.
Right.
But they're waiting as prices are coming down. They're waiting as owners are now realizing we're moving to a buyer's market, not a seller's market, where owners are willing to make repairs now on the home. They don't have there's no more bidding wars going on right now.
Right.
You know what I mean?
Yeah.
So it is definitely a buyer's market.
Okay.
But I feel the buyers that are out there are so shell shocked by the rate that we're kind of like, we're just going to wait.
Right,
so when you have the building permits dropping, and you have people leaving the market, not leave, but waiting, what's going to happen is we're expecting, of course, inflation raises the rates. Inflation comes down, interest rates go down.
Okay.
So it's projected that interest rates are going to be lower next year. They're saying sometimes next year we'll get back into the fives. So what's going to happen then? You're going to have all these people that are going to be coming back to the market,
right? And
then you're going to have a shortage of homes again, because what happened? Permits dropped. You know, the new. So my point is.
Now, is that builders? Because you know, I've noticed this where builders are not. They're not doing a lot of what they call spec homes anymore.
Right, because they stopped pulling the permits. They're like we're hitting a lull. You know, they're not building at the rate they were. So, in my opinion, you're going to have people coming. Not my opinion, but statistics are showing us you're going to have these people that are now 7.5%. That when those interest rates drop back down in the fives, which is what they're projecting next year, they're all going to come back to the market. But they're all going to be coming back to the market at a time when we're not going to have the inventory.
Well, so the question is, how much cash does the builders have to hold out?
That's a good question.
It's going to be, so basically, we're playing poker here.
Yes.
So the builders are playing poker with the buyers, and the buyers are playing poker
with the sellers, you know, not just, I'm not meaning not just talking about because we know sales, it's turning into a buyer's market. So sales have fallen a little.
So just from a mortgage standpoint, now, have you seen a lot of issues with appraisals? From
We have started to see appraisals. There are a few. I don't that haven't come in for the asking price. So
Good.
what's happens then? So the seller has to lower the price in order for you to, for
Yeah.
someone to get a home, a loan on a home.
Okay.
So it is certainly turning in. At this point, buyers are starting to have the advantage.
Okay. So what do you say to that buyer that's kind of sitting on the sideline, that's maybe waiting for the right opportunity?
I would say start understanding the word refinance. There's this big saying that's trending right now, marry the house, but just date the interest rate.
Okay.
So
Okay.
love the house,
Okay.
but man, you're not serious with the rate. And that's okay, because what happens when the interest rates go down is you refinance.
Okay.
But you were able to buy at a time when it was to your advantage to buy. It's
Right.
a buyer's market.
Yeah.
That owner's going to make the repairs that are
Yeah.
needed. If it doesn't appraise, they're going to lower the price. It is a great time to buy if so just remember, marry the house, love the house and the lifestyle. Just, you're not real serious with the interest.
So what I'm going to say is, tune in to our next video when we talk about the importance of buying the house and not the rate, and we talk about refinancing. But Margaret, I want to thank you for your time. But YouTube, please hit like or subscribe to this video. I will post Margaret's contact information. So if you have any questions about mortgage, but like my videos, I look forward to y'all watching this video and enjoying more like this as we interview people that are heavy hitters in the real estate space. And thank you for tuning in to the Resolution King, where we strive to bring you solutions to your real estate problems, whether you're buying, selling, or investing in real estate. Until next time, thank you.